Do you want to work in finance? Do you want to find a high-paying finance role where you can earn a large salary and experience large growth in your salary over the years? Well, in this video, I'll be explaining to you the top 5 options within the finance industry for your career where you can experience massive salary increases. Option number 1 is hedge funds. Now, hedge funds in recent years have seen salary increases of about 16%. Now, when you take into account inflation is rising, cost of living is rising, having a high-paying role within the hedge fund industry will be very lucrative for yourself and help you combat and keep up and keep ahead of inflation by earning a high salary, investing accordingly, and moving forward with your career. So, hedge funds, what exactly are they? You probably heard the name hedge fund a lot. Hedge funds are essentially these small financial firms. They're like investment funds. They have a large portfolio of money to invest in from their high net worth clients, from major companies that want to give their funds to a hedge fund to do all the analysis and do the investing on behalf of their clients. They use various strategies looking at long positions, short positions, whether the market's going to do well, certain other markets not going to do well. So they would be long the markets that are going to do well and short the markets that are not going to do well. And they would look at all types of investments, whether it's equity investing, derivatives. In certain cases, they would use leverage, which would mean borrowing credit and investing to generate high returns. So it can be quite a intense, high-risk job, but it does pay well. And as I say, the salary increases of 16% are significant. It's nothing to be scoffed at. Now, option number 2 is macro sales and trading. They've also seen massive salary increases in recent years of 12%. 12% is significant, again, when you take into account how high the rate of inflation is. Macro trading involves making investment decisions based on macroeconomic trends and global events. So just to clarify that, macro trading essentially involves investing in countries. So you could invest in a country's stock market, country's index fund, a country's sovereign bonds. They're massive companies. They're the country's major companies. So investing as a macro trader would involve being aware of what are the broader global trends. Should I invest in, for example, oil based on oil in the Middle East, oil of Middle Eastern countries, depending on how volatile the markets are. If there's a war, for example, between Ukraine and Russia, how would that impact your investments overall? Should you invest maybe more in America because they're a more stable country? So you look at these overall macro global trade trends and invest in companies and countries based on those trends. And you'd be looking at things at the country level rather than the individual company level. So that's another good option for you. So macro sales and trading. So you'd look at interest rates, currency fluctuations, which country's currency is doing well versus not doing well, those geopolitical developments. I mentioned wars, oil trading based on, say, conflict in the Middle East. And you look to profit from those global trends. So that's option number 2, macro sales and trading. Option number 3 is commodity sales and trading. So this has seen salary increases of 8%. Again, nothing to be scoffed at, quite a major increase in salary overall. Now, commodity sales and trading professionals will be looking at trading commodities, of course. So gold, oil, agricultural products, food products, other types of precious metals, semiconductors, things used to make phones, to make your laptops, things like that. Now, this is a very interesting market to be in because commodities can be quite volatile, particularly now when there is a focus on climate change or environmental, social governance, ESG, when there is global conflict also, when there is people looking at alternative investments. If the stock market's not doing so well or countries aren't doing so well, people might look to invest in gold. If there's a conflict in the Middle East, they might look to invest in oil. If there's food shortages or suspected food shortages, people might look to invest in food producing companies, agricultural farming companies. So it's a very interesting area to be in as a trader or a salesperson. So that's an interesting option for you. Number 4 is DCM, debt capital markets. Debt capital markets, typically that'd be a job on the investment banking side. A debt capital markets team, what they would be doing is looking at issuance and trading of debt securities like bonds, government bonds, corporate bonds, other fixed income products, and they would be looking to raise capital, raise money through issuing debt, issuing bonds for purchase in the market, and they'd raise money for these companies or these governments so they can, invest in whatever they want to do. So if a company is issuing a bond, it's essentially like a debt, like a loan. They would take the money that from investors and invest it in growing their company. Same thing which governments do. They issue these bonds, people invest in their bonds, and in return these governments would take the money earned from the bonds and invest in making their country better, investing in their infrastructure, the skills of their people, so they attract more businesses and help their own economic growth. So debt capital markets is quite interesting on the investment banking side. Could be maybe long hours, quite intense type of work environment, but it's a good option. It's a good way to start your career, or at least spend a few years in your career to really develop that high skill level and that strong work ethic. Option number 5, the fifth and final option, is credit, sales and trading. Now you could see salary increases of 6% here, which is again quite significant, and it's a good skill set to develop. Credit trading involves selling debt securities, again similar to DCM, so credit, sales and trading. Credit, as the name would suggest, trading in loans, trading in corporate bonds, credit default swaps, other credit derivatives. These are all quite good skill sets to have if you know how to trade these products, understand these markets, which can be, they're quite large markets. I've worked covering the credit business within Goldman Sachs on the sales and trading floor there, and it's quite an interesting business because you're dealing with all types of companies all over the world. You're dealing with companies doing quite well, and they have investment grade bonds, companies not doing so well, relying on junk bonds, relying on issuing loans, looking for kind of very niche financial solutions for a difficult time. So that's quite interesting. You're dealing with a broad set of market conditions, and regardless of whether the market overall is doing well or not doing well, it's always an interesting part of the business to be operating in. So there you go. There are 5 key options in terms of high salary increases that are open to you. Just to finish up, number 1, hedge funds, where there have been salary increases of 16%. Macro sales and trading, salary increases of 12%. Commodity sales and trading, increases of 8%. And then DCM, debt capital markets, have seen increases of 7%. And lastly, you have credit sales and trading, which have seen salary increases of 6%. All great options for you to consider. And again, not all of them have to be investment banking roles, as you might have heard. There are many other options in finance that do pay well, such as what I've explained here. Thanks for listening. I'll see you in the next video. Check out the 2 recommended videos on the screen right now and the free ebook in the description. I'll see you next time.